Hello there traders, good morning, good afternoon, good evening as well globally to all traders out there. Welcome to today's Friday's market wrap up by Bretton Academy, or better known as the BFTA. My name is Kenny Simon with you. Today is the 16th of September 2022. So we have got a very busy week. We've got a lot to talk about, so we're going to get straight into it. And this particular webinar and all the webinars that I will be actually conducting will be sponsored by 10 Academy as well as 10 Trade, and we will be actually going through the 10 Academy platform as well as your preferred tool of operating your analysis, whether it's technical, fundamental, onto the 10 Academy's dashboard. So it looks something like this. So we'll go through it when we are going to be conducting all the analysis there. So welcome to everyone, and we are now going to be looking at a couple of very successful trades. I think it was about 70+% of the trade ideas. Probably a little bit more than that. I would say out of 10 trade ideas, about 7 or 8 went to its way to hit the take profit level. So that was really good news for this whole week. And we've got a couple more trades going on. And just before we go through, I just want to show you the Bretton Academy's website right here, where you can also register for the webinars or read a little bit about the webinars and check out the online courses and become a member and various other things. Now with that, of course, Bretton Academy is the preferred academy at the moment for certification courses, as all the certification courses are accredited by the London Association of Trading and Investment, also known as ATI London. So do feel free to go on to atilondon.org. Now certification courses are those that are accredited and certified by ATI London, are internationally recognized, so you can actually have your courses, certificates onto your CVs as well, or onto your LinkedIn profile and various other avenues that are professional and also accredited or recognized internationally. So there you go, guys. Now further than that, what we would like to do as well is, before we go on to the trade ideas and looking at the market at the moment for opportunities to trade, what's important is to look at how the market has actually moved and what have actually been mentioned fundamentally, especially with economic data releases, the current inflationary mode that is happening around the world right now, instigated, triggered or rippled by the US, and then now it's actually flowing through to the whole of the European zone. We've got loads of challenges by the UK government as well as the Eurozone in beating inflation, and also rising of prices of commodities as well as goods and services. And this is a very big battle that has got a lot of connection with sentiments that are going around in the market, within the communities as well, with anxieties and stress as well, and that does actually get rippled into the market quite a lot. So we want to look at how we can always bridge the gap between fundamental and technical, and then we are able to go through sequentially, step by step, in analyzing the market using a trade plan that we call it PRICE. It's a copyrighted trade plan devised by myself, and it's called the PRICE trade plan. So we'll go through that as well as we practically analyze the market and also make trading decisions at the very end. Okay, so with that, would like to introduce you to Forex Mirror, that is incorporated within the 10 Trade portal or dashboard, educational dashboard as well. Now this is where we get a live stream of breaking news as well, all amalgamated from various sources in one place. So that's the source there for you is forexmirror.net. So you don't need to go on to forexmirror.net, but once you are a trader, client with 10 Trade, the broker itself, then you are also within the 10 Academies dashboard as well, and you will have access there. And with that access, you'll be able to look at all the tools that are available, from webinars, ebooks, courses, certification courses as well, especially the tools that are needed right here for your analysis. So these tools does actually include your money management, risk management tools as well, calculating your lot sizes. We've got your fundamental side of it to look into the economic calendar and various other things. Now, with all these tools that we are applying in the market, you would need guidance on strategies, how do I use the indicators? What indicators do I actually use on the technical side of it? How do I conduct my analysis using the trade plan and various other things? Now, all these topics will actually be covered in very short video tutorials that will be made available to you on the 10 Academies dashboard. So this is really crucial. It's a self-paced learning. They are all pre-recorded. They are video tutorials basically on special topics. Now the topics would actually be categorized within your technical analysis related subjects and topics as well. Fundamental analysis like the economic calendar. How do you actually decode certain information that you have not been taught on how to actually decode these from the economic calendar itself. How do you actually look into connecting one very relevant or significant economic data with another and create a story in that to predict the markets as well, because the whatever that happens within the economic calendar especially, we are looking at it as fuel in the market, okay? Fuel in the market to push on volatility and liquidity. Basically, volatility is your lifeblood, especially in the Forex market, also in all other markets, relevant financial markets as well that we are trading. Now, the best part of it all is that we will be trading on the 10 Academies platform, let's say, on CFDs. So that gives you a whole wide range of financial markets to trade on. You can either trade on the upside of the market or the downside of the market. That's the wonders of trading CFDs. Now, you've also got a range of instruments from Forex, stocks, cryptos, to precious metals like gold and silver, as well as oil. Now, we have got loads of interest at this moment of time to actually trade oil, commodities, currencies as well, with all the happenings that are going on at the moment with the Ukrainian and Russian warfare that is going on at this moment of time. How do you actually understand the different types of the 5 types of war that is actually going on, or the 5 types of war that actually could give out opportunities for us to actually trade? But what's most important is for us to have a standard operating procedure through a trade plan. So this is where the videos that are available, the short tutorials and the tools and various other things are all available at one place in your 10 Academy's dashboard. So do visit the 10.academy website. It's very simple, www.10.academy, and you'll see what I meant by all the tools in one place. It's your hub for researching the market. Now, when we research the market, we need to research the market from a fundamentals, sentiments, trend, then technical side of it. So it's not jumping the gun and going straight onto the technicals first. That would actually increase your probability and reduce your risk. What would actually increase your probability is the quality of research and the quality of managing your time doing that research, and the quality of information that you have gathered to analyze the market, or have actually encouraged you to analyze the market more accurately. That is the most important thing. Okay, all right guys, so that's basically on the dashboard side of it. I've also shared the atilondon.org. It's a non-profit association that credits all the certificates that we are releasing at Bretton Academy, as well as the 10 Academy. Now, with that, as I've mentioned, we have got some hot stories or breaking news on the fundamental side that we would need to be aware of. Now, this is really important before we jump the gun to go straight onto your technical analysis, because a lot of traders out there are asking about the positions for gold, the positions for how far would gold be dropping more, how much more does Euro JPY would actually reach which level of resistance and all that. Now, that is good, and they are good questions, but then it may actually be heavily weighted onto the technical side of it. What we would need is that to start off the day or start off your trading session with fundamentals, sentiments, trend analysis, and then use the technicality side of it, the technical analysis, your trend analysis onto your chart as a confirmation tool. Okay, so the fuel to bringing your trades to hit your take profits would actually be fundamentally driven. Usually it's news, fundamental side of it. Fundamental analysis itself does actually include calamities and unexpected events as well, because you have to have all that categorized within your fundamentals, and your fundamental has to then encapsulate sentiments analysis, trend, risk off, risk on, and all that. Anything that's out of the chart, breaking news as well, should actually be categorized under your fundamental, but it's got branches out from the fundamental analysis, including intraday analysis, intermarket analysis, not intraday, but intermarket analysis, which basically covers the connectivity between one asset class with another asset class. How does the Forex market or currencies market gets connected with the silver and gold market? Does it actually have any correlation? Does it actually have any correlation with the happenings in the UK, for example? How does oil relate to once they have actually announced something on within the OPEC meeting, and how does that then connect with the other governments and other countries and other currencies and other asset classes, so that we are able to pick the right pairs and right asset classes, right instruments to trade for the day. That's the most important thing. Now, that's the quality of research using a very simplistic mode of operation, or we call it a standard operating procedure within a trade plan. So you've got a trade plan that has a sequential step. Step one, what do you actually do? Step one, you would need to be very aware. That's the P side, the letter P of the PRICE trade plan. So now we're talking about the P side of it. All right, so the P side of it has got hot stories at this moment of time on Forex Mirror itself, it's quite an interesting website where it does actually amalgamate, all the top stories and give you a summarized version right there. Now, this is important for us to look at just the headlines for now because we are on a Friday. It's Friday morning here. It's 11:18, just before noon Cyprus time in Limassol at this moment of time. And we are looking at the US market about to open in another couple of hours time, but we've already got all the major European markets as well as the London Open. So London Open has just begun. Now that's the gorilla of the market, the Forex market especially. So the Forex market is heavily traded in London. The commodities market really heavily traded in Chicago, and the equities are heavily traded in New York. So this is where we need to focus on the market sessions, on where they dominate most, on which instruments or asset class. So now we're talking about Forex pairs. Predominantly, we want to actually get in sync with what's going on in London, especially in the London market open, and also what's been going on geopolitically, politically as well, in London, in the UK in general, because it has some intermarket correlation between the economy in the UK, the geopolitical situation, with the current standing of gold as well. So that's been happening for the past a year or so within the COVID times as well. It has actually sparked that correlation between price of gold with the current economy and the heavy transactions and various other asset classes that are going on transacted in London as well, with what's going on with the gold market, especially gold prices, gold futures market as well. Okay, so there you go. Now we have got Nasdaq 100 breaks lower. So very easy. 100 top companies within Nasdaq, they have broken lower, more on the bearish sentiment. We just want to get this level here, this level of understanding of what's been going on in the market from a news perspective. Then we've got AUD USD. It has test major support. What that actually means is that it's got a potential of bouncing upwards. So if it is AUD crosses, then it's got to do with commodity crosses like New Zealand dollar. We need to monitor as well. Canadian dollar, that's correlated with oil, but not so much pegged, but still has got some correlation right there between Canadian dollar, Canadian economy with the supply and demand of oil, especially oil barrels, and also it's got its connection with the WTI in the US as well as the Brent oil. So AUD crosses, we want to take a look at that, and it has mentioned AUD. So when we get onto the tools side of it, like the heat map and the top 10 movers, then we know that we need to also look at whether or not AUD is mentioned there as well. Does AUD crosses be good for us to actually pick for today as well, because it correlates with what's been mentioned in the news as well. So we want to always connect the dots and basically have got justification of why we are actually choosing a particular asset class or a particular pair to actually trade, dependent on what we have found in our research side of it from both fundamental and technical analysis. Okay, all right, now Ether, that's on the crypto side of it, lost support, so on its way down, further down, but not the advantage yet. We don't know what that means until we click on it, read on it and stuff like that. But at this moment of time, not that necessary to do that, to go and read one by one the news and then get deeper, and then you might get lost in there. So it's better for us to use tools instead to point the right direction in terms of trend. The clarity and the strength of trend is really important. So World Bank warned for a devastating recession next year. So we want to also know, how does the media, mainstream media, regurgitate all these news and pass it onto the market, and that is what is going to be digested and absorbed by the traders overall, right? Both traders and investors. So at least we know that they've got a very big title there, devastating recession. Now, recession is a very scary thing with governments. Governments, they fear recession big time, so they will come up with loads of approaches to actually ward recession. So now we know that word recession is really, it's absorbing into the market through mainstream media. We want to know how much more it's going to be absorbing in the market, because it would then be attracting the buyers of safe havens like gold, and also the JPY, the CHF and all that, and that would actually be an alert for us to be aware that that's the time where market would actually be reversing into a risk-off mode. When they are into a risk-off mode, then they would actually be buying more gold, and then we have got more safe havens going up. So that would actually answer the question as well on whether or not gold is going to be reversing. Now, gold will be reversing once the risk-off mode, the risk-on mode, as we have talked about since Monday. So Monday, Wednesday, we've talked about how you know, the yen has been selling off, CHF has been selling off, so safe havens have actually been selling off together with gold has been selling off. So it's been selling off because of the risk on, because people are on a risk on mode. They were actually trading and putting their money into risky assets, and they were not very careful. They're not, you know, their sentiments are more towards the greed side of it, and they're building onto their assets and going aggressive with buying and buying and buying. So that may have already sort of ward off. I mean, ending of the week are looking at a lot of sell-offs that have actually been drained a little bit more. So we are looking at support levels that are very close at the moment. So there might actually be some reversals, and we need to be careful with that, especially on a Friday, because we don't want to make too drastic, too fast a decision on a Friday, and then have that trade on for the whole week, because you know we'll battle with the weekend and the market gap on Monday, which will be a very, very risky thing to do. So I would propose for you guys to do to conduct more intraday trades, you know, a bit heavy on the intraday trades, you know, short to medium term ones, especially on a Friday. And on a Thursday, we could actually be a little bit more, you know, a bit more aggressive in terms of JPY. In terms of JPY trades, JPY crosses as well, because they have got a higher pip movement, average pip movement that is going on every Thursday, especially for JPY crosses. It has been like that historically for over, I would say, about 10-15 years already at this moment of time, and it's still happening, where I would be very interested in trading JPY crosses as well, with trading opportunities especially, and trend clarity when it comes to Thursdays. Okay, so Friday, that's the game plan right there. Focus more on intraday trade, short term especially, just so that we are not going to be trapped into market gaps on Monday. Okay, and we've also got equities under pressure on hawkish Fed expectations. So you see that we've got two things right here. We've got equities correlated with the interest rate decisions, right? So we have got hawkish meaning bullish, all right? We've got it coming from the word hawk, like the eagle, the bird, and that bird usually flies high, so that sort of communicates the bullishness of the market. So if the Federal Reserve is bullish or hawkish, that basically means that they've got more room to increase interest rates, and then we've got September 21st at 20th and 21st to be a very significant date. I've mentioned that on Monday as well as Wednesday on interest rate decisions as well. So that could actually be very significant to not only US crosses, but I would say in general, the whole currencies market and various other asset classes, and also gold and silver. So we want to actually monitor that date as well. It has to be a very important date on the fundamental side of it to actually be aware of, because that's the fuel right there, okay? The fuel to direct the asset classes into which direction, okay? All right. Now we've got recession again. So recession has been mentioned 2 or 3 times here, just within this hot stories line. So that basically we need to be very alert that that's the big the big thing right there, recession. Okay, inflation versus recession. Now, inflation, recession, very, very dangerous. They are actually, coming up with loads of tools to actually curb inflationary in order to prevent recession as well. Okay. All right, there you go. Now we have got, it says deeper curve inversion, various other elements right there, but at least we know we have got recession right there. We've got AUD USD to actually look at as well. Now AUD crosses. Now as we go lower, we could see that there's a highlighted news on UK retail sales, and they have said that it's dropped. So it has actually dropped following the UK data release for retail sales at negative 1.6%, so down by 1.6% on a month-to-month. And then we have got August, the sales value also down now. Sales got to do with retail sales as well. Retail sales meaning the consumption, consumers, how much money they are actually spending. So if they are not spending a lot and their sales have actually dropped, that has again got to do with income level and also jobs. So there you go, that's the connectivity as well, and that would actually be what's driving the UK's economy to the downside a little bit, and we have got more bearish sentiments coming through. And now as we go on to or hop onto the trading tool, especially the heat map, we want to look at all these things are actually in line with what we have just read. We would like to see that the UK, GBP crosses, for example, are on the downside. We want to see dark rates there. We want to see that it's got some other currency that we can combine it with, so it would create a trading opportunity for us today, right? So we want to also look at USD and AUD crosses as well, and then look at whether or not it says AUD test major support. Let's look at AUD crosses as well and look at the heat map as well as the top 10 movers on the Action Forex website right here. So here I would like to refresh that all the time. If you have left that website or any website especially you're on the tools, it's probably best to make sure that you have refreshed it. And sometimes it's not been refreshed, and then we are based, I would say, relying on second-hand news or not very fresh or not very recent data. So that would actually impact our research and our analysis as well. So when we look at the generic one right here, we've got a blue column, dark blue column filled by blue, mostly dark blue bars under the GBP. This does not mean GBP is the one that is strongly bullish. It means that all these currencies on the left are more bullish than GBP, which basically sums it up as GBP being bearish. Okay, so GBP crosses, GBP would actually be bearish compared to the other pairs. So that does actually sink in with what we have just looked at on UK retail sales. So because we have read that a little bit, just a headline, so we've got a bit of a support gauge, evidence that the UK economy is going downwards, and that is mainly its bearishness is due to the UK retail sales that has been negative or has actually been low, and it's not really very positive in terms of the number on a month-to-month. It has dropped by up to 1.7% on the sales side of it, but the sales volume, basically both sales volume and sales value, very, very important data actually that gives out the health of the economy as well, from the buying power, from the consumption, from people spending in the retail side of it. If people are not spending, sales are dropping from all the major outlets especially, then there's a sign of something's going on not very right, especially recession. But then for us, it's an opportunity for us to sell off the GBP, if at all we find more evidence, and then we go on to step by step and look at more evidence, and we tick and tick and tick, and then yes, it's a strong and smooth trend on the downside for GBP crosses. Then we are able to pick the trades for the day or pairs for the day and start trading them. Okay, all right. And that's basically it. Now let's go on back onto the Action Forex, and we'll now look at one by one each currency. Now USD, for example, USD crosses, giving us very clear trend at this moment on the upside. So USD versus GBP, very strong. USD is more bullish than GBP. We've got the whole column under GBP, very blue or dark blue, and they are all filled up in all time frame, from 4-hour, daily, weekly to the monthly time frame. That's what it means. So you have got dark blues on all across time frame. So this is a pair, GBP versus USD, that I would like to then write it down and take it to the technical analysis side of it, to actually conduct a trend analysis first and then a technical analysis, and look at where we are able to enter and exit trades for GBP USD. Okay, so we've got GBP USD as one possible pair that we can pick for today. USD CAD as well. Now the GBP USD, we're looking at GBP being on the downside, not the upside. It's being on the bearish side of it, right? Following the news as well. So then here CAD, USD is more bullish than CAD. So USD CAD has got buying opportunities because CAD is on the sell side, bearish side of it, and the same goes for USD AUD. Now AUD USD would actually be on the downside. Now that because this one here shows that USD versus AUD. So USD is more bullish than the AUD, right? So then when we went to the, so that basically means AUD is more bearish, correct? So does this actually mirror Forex mirror? Now the way it looks like is it's testing major support. It's on its way down, it's testing some support, but we don't know how strong that support is. So what we need to do is to look at AUD, how weak AUD is. If AUD is weaker and very bearish, that basically means it has the potential to actually break out from the support that it has set. Now we will look for that support when we go onto the chart, and we will actually then conduct a trend analysis ourselves to make sure that we understand how smooth, how strong the current trend is, not the trend of the past, the trend of 1 hour before, no, the trend for now. Okay, if you're trading now, you need to know for yourself the trend for now, how smooth and how strong they are. That's how we will be conducting that on to the chart. Okay, now it's all before the chart. Okay, to give us hints on what to look for the when you enter the chart. Okay, there you go. So that's it for the AUD. AUD we haven't gone through, but we are looking at pairs that we can actually conduct pairs that we can pick for today to conduct a trend analysis first. They could potentially be trade ideas and trade signals as well, but we haven't reached that side. Now it's just picking of the pairs, and picking of the pairs, it's also still at the P, the level 1 or the step 1 of the PRICE trade plan. Okay, the psychology of the market as well, it starts with P, that's the trend as well, or risk off or risk on. Now here with USD, again, it's GBP USD, USD CAD, AUD USD, and NZD USD. These are pairs that we can do a trend analysis to make sure that it mirrors what we see on Action Forex as well. Now, as we go into Euro, Euro does not give us a lot of blue columns, dark blue columns like the one you get on USD, but it has one right here which comes under GBP. So Euro GBP, Euro is stronger or much more bullish than the GBP. So this is another pair to look at, Euro GBP. So GBP is indeed weaker than Euro and also USD. So here on JPY, we don't have that straight column, so we'll pass on the JPY crosses. It gave us a really good bearish or selling opportunities for JPY just from Monday onwards, and we have picked and we have hit loads of TPs with JPY crosses, as we have also indicated that Euro JPY and Euro JPY crosses and JPY crosses are good to trade for this week, and we we have actually gained close to about 300 pips in total for about 4 or 5 pairs only, just trading JPY crosses for this week, because we have alerted you as of Monday that JPY crosses are great to trade. Now that flow or that opportunity has actually ended for JPY, but then it's got more on other pairs and other currencies as of today. Now, as of today, again, if we look at GBP, we have got lots of opportunities, selling opportunities, as GBP is picking up its bearishness against the USD, the Euro, and the CHF. So I would like to pick and write down, if you guys can, GBP USD, Euro GBP, and GBP CHF to actually conduct a trend analysis on, because these 3 pairs might give us some selling opportunities, especially selling the GBP against the other 3 currencies. And if we move to CHF, then we have got GBP CHF again. So again here, CHF is a safe haven. CHF is bought at the moment, and basically it is more bullish than GBP. So we can pick GBP CHF and look at selling opportunity for GBP CHF, since it's showing us a very clear sort of bearish sentiment for GBP, but bullish sentiment for CHF. Okay, now as we move on, we have got another straight bar, all red, under the CAD. So CAD USD, we've seen that earlier on the USD bars. So USD CAD, it's going to be an opportunity right there. On CAD will be on the selling side, USD on the buying side. But again, this is not to tell us that you can go straight onto your chart right now and click buy or sell. No, this is just a trend analysis on the fundamental side that we are actually conducting at the moment. We need to then conduct a trend analysis on the technical side once we have chosen all these pairs. Okay, now AUD. Now AUD indeed is bearish, but bearish against the USD. Against the other currencies, it's not really that sure, because it's got mix of colors at the moment. It's got some blue, it's got dark blue, it's got some red, it's got dark red. So it's not really good on the other pairs. The ones that's clearer is against the USD. So AUD is clearly shown to be very bearish against the USD. Is this true? Is it happening right now? That is where we need to do the trend analysis on our own once we get onto the chart. Now NZD, the same thing. We've got one column right there, which is under the USD. So that basically means NZD versus the USD is going to be quite bearish. We need to confirm that with our own trend analysis when we get onto the chart. So it looks like we have got quite a number of trading opportunities. When we have got more than 2 or 3 pairs, that could actually bring about at least 15 or 16 pairs to trade in total. The reason is because of correlation, correlated. Each one could actually be correlated. Each one pair that you pick as a trading opportunity could actually be correlated to another 2 or 3. So you imagine you can actually branch out and multiply your trading positions, and basically it's a mode of diversifying your currencies trading portfolio in a way to actually trade multiple currency pairs and many currency pairs within one trading session or within the day. Even though it's an intraday trade, we can actually systematically pick and choose the right one with high volatility and high liquidity, as well as very clear and smooth trend. This is the key. When you start off with a very strong base of choosing the right pair, then you are reducing your risk of reversals, your risk of entering at the wrong timing with the wrong price as well. So that is where the key is, always to start with the first P of the price trade plan, the P. And then you go on to the R, which is risk to reward, and then you look at calculations, simple calculations on what would you like to trade, what lot size would you like to open, look at your equity level, look at your risk level, your risk appetite as well, look at your current standing of how many trades you have left open, what are the pending order opens. So there are various other elements, and all these things that I am telling you as well or sharing with you are going to be made with short video tutorials for your self-paced learning on the 10 Academy's dashboard. Okay, all right, very exciting times. We've got loads of guidance, a lot of videos, a lot of tools as well for you guys, no matter which level of experience that you have, there is always something there for every level of traders, whether you're a beginners, intermediate or advanced. There's always tools, approaches, techniques, strategies that could complement your current methodology or even strategies and techniques. Okay, all right, there you go. Now let's now take a look at the top movers just before we go on to the chart. Okay. All right, now on to the top movers itself. You could actually see that predominantly from the first place to the 10th place, we're looking at the predominant what do you call that, coverage of GBP. So GBP is dominating in that whole 1 to 10 position, right? So we could see that we've got GBP 1 to 3 from the first to the third position right there. Then we've got again here the fourth one, fifth one here, 6. So 6 out of 10, 60%. Of that table right there is dominated by GBP crosses. And again, we want to also look a little sneak review onto the Friday's economic calendar, just so we are aware. I know that yesterday was a very long docket of economic calendar, but mostly dominated by short, I would say not short, but low impact type data releases. We did have some high impact ones, but now we need to look at today's Friday the 16th. So Friday the 16th, we have got Chinese data announced, and that's for retail sales. Now this is really very important. Now remember, you guys, I have always guided you guys on guys and girls, of course, to connect the dots. When you actually look at CNY, when you look at Chinese data being announced, and especially for red bars, which indicates high volatility expected for that data release, as well as it would impact the market and create loads of volatility. So this is one to focus on. But when it comes from China, when you've got Chinese data, we need to also monitor Australian dollar and New Zealand dollar. It's got a triangular kind of correlation. We need to connect that dot so we can find opportunities to trade on AUD and NZD crosses. So we've seen the heat map. AUD is clearest on the downside against the USD. So it's really clear that the USD crosses, especially with USD leading the way on the bullish side of it. So we've got a pickup of USD going to the upside. Now that pickup of USD going to the upside, we need to also look at what's going on with pound. Now pound is actually being pounded downwards to go downwards and having more bearishness as well, right? So that downness is triggered by what we see on the retail sales figures and all that. Now remember, I've also mentioned that you can actually connect whatever that's going on fundamentally in the UK with the current price of gold. So you can see that positive correlation between UK's economy and the bearishness of the GBP with gold's bearishness as well. But the question is, how far can gold actually go down? How far the GBP is actually going to fall to, and where is that current support? So that is where we will go on to the technical side of it, and we use the technical chart or your chart as the front view, as though it is the main screen of your cockpit in the plane, or basically in the car where you've got your windscreen, right? So that windscreen, to know where you are going to go, is your technical side of it, your technical analysis, your trend analysis using your chart. Anything on the chart is your front screen, is your windscreen, basically, to give you that view of where to go. So your direction, your GPS, so your geometric patterns, strategic strategy, or anything like that would actually be your GPS. So your GPS is your technical chart to show you visually where can you go, how high, how much more can you actually buy, where's that resistance, and vice versa for the downside of it as well. And also to look at overall, it's like a map for you, right? So you would look at your technical analysis as your windscreen and the map to draw out areas where you can actually go and where you need to exit, where you need to enter, and all that visually. That is your technical analysis metaphor. Your fundamental side of it is the fuel in your car to actually take you how far up, how far down, and that is basically the volatility and liquidity driven by news, calamities in the market, geopolitics, anything that's been also sort of passed on by mainstream media, and then it gets really popular out there and everybody's talking about it and everything, and that basically is the sentiments factor. That is what's going to drive emotions, whether or not sideways uncertainty, upwards greed, or downwards fear. All right, so the three emotions as well are governed by people. At the end of the day, it's all people. Even though you look at the charts and you've got all these movement of candles, they are quite technical, for example, and but then it's all driven by price, and price being driven by activities of people based on their emotions. You know, whether or not it's more greed, more uncertainty, they're holding the trade, they're not sure before a market data release occurs, or they are really fearful and they take out their money from from non-safe havens into safe havens, and that's been driven by fear to drive the market downwards. Okay, so this is how we want to always build a story and understand that. But as we build that story and trade like this and knowing how to connect the dots, we are researching the market, putting all the elements into a sequential step of a trade plan. If you do this and you go through step by step, you are analyzing the market. You're researching and analyzing the market and not gambling your money away. And basically you are analyzing the market and you are a trader investor as opposed to a trader gambler. Okay, all right, there you go, guys. Hope that's been clear. Now we have got Friday, we have got more connection to AUD and NZD because of the Chinese data that you can actually see. We have had new home sales report there earlier in the morning when Australia's open together with NZD. Now NZD, AUD is always together in everything, right? So in the movements, in the data releases as well, as you can see, but they are all connected to what's going on in China and Chinese economy. Now the retail sales, for example, right, has got a lot of connection with the amount of production as well, right? The production of goods and services, especially goods. But all these goods, raw materials, are actually bought from Australia predominantly. So in order for them to do that, now has that buying of raw materials, minerals and all that from Australia has actually, it has also declined. So that is now impacting sales as well. So we need to understand the connection of dots on how far it would actually be behind the scenes. So that's a very strong trading partnership between China and Australia, especially with New Zealand as well and Canada as well. But then top of the list is Australia when it comes to China's trading partner, especially on the import-export side of it, production of goods and all that. Okay, there you go. So we have got that idea. Now, when we go back here onto the heat map, it's just a guide to now start picking the pairs that we can analyze together. Now, let's say if we are looking at USD crosses, then we can focus on GBP USD, USD CAD, AUD USD, and NZD. So we'll start off with GBP USD first, and then we'll go on to AUD USD and also NZD USD, right? Just so that we go through a sequential step of analyzing the market technically before I talk about gold and all the TPs that we have hit successfully, and also all the mapping of prices that we see that the prices have actually hit on the dot on all the lines that we have drawn. Basically, it followed through the map very well. So we have drawn the route and based on that map, and it has followed that route very, very well. So we want to talk about that as well, past successful performances, especially by traders out there. Congratulations, you've hit a lot of pips as well for the week. Okay, and we've got Euro JPY is the same. I've shared some trade ideas, trade signals as well as of Wednesday, so we want to revisit that. That was a very, very successful trade, right on the dot as well, because all these movements that you can see based on the daily chart basically occurred exactly as we predicted, mainly because all these lines that you see here, especially the red ones, have been pre-drawn before the movement. So imagine it has actually gone there and hit exactly onto the lines that we have pre-drawn days or even weeks before, and it has actually respected that and come down, or come down and respected that and bounce upwards. So that's been really good. Okay, let's now start off with Euro USD, for example. Here, based on USD crosses, we don't see that all blue on the euro, right? But we see all blue, dark blue on the GBP. So it's better for us to take a look at GBP USD to conduct a trend analysis for now. So here I will switch this with GBP USD, and let's take a look together and conduct a trend analysis first. I've always got the 3 EMAs ready on my chart for any instruments. It doesn't matter whether it is stocks as well or crypto. I always use the 3 lines. They are the 50, 100 and 200 exponential moving averages. Okay, so here we want to start off. We're looking at GBP USD now, and we want to start off with a trend analysis from the 1-hour chart. Now, as you guys know, now I've chosen the GBP USD from 2 angles, right? The fundamental angle, and now I'm going on to a trend analysis in order for me to then go into technical analysis in a bit. But now we want to know the trend. Now, with trend, for example, the other tool that you can use besides the 3 EMA lines is the ADX, Average Directional Movement Index. Very easy to use. That indicator indicates whether it is strongly downtrend or strongly uptrend for whatever trend that you have seen. Okay, so if we are looking at it as a downtrend, that basically means that if the ADX level is above 25, there's a blue line that I will show you right now. So you go on to insert indicators and go on to trend, because it's a trend indicator, right? So we have got 4 types of indicators as well. We've got all the tutorials on telling you about indicators as well, how to use them, or what are the preferred ones to use as well, for what purpose, all on the tutorials on 10 Academy. So we have got pre-recorded videos that you can actually use it self-paced. You can actually watch it anytime to educate yourself on specific topic, and they are special because they are specific practical topic, not just theory. They are the ones that you can easily apply right onto the trading, and the ones that I've been speaking about as well. So they are your referral videos to actually watch over if you want to watch over to gain more knowledge, or you want to learn, or you want to just recap on things that we have applied practically during our trading sessions. Okay, there you go. Average Directional Movement Index. It's also called the ADX. You don't need to worry about anything. You leave the period there. You can leave the colors there as well. And then you will just focus on the blue line, as you can see. You would need to add a level though, level 25. That's all you need to do on the ADX, Average Directional Movement Index. But in the video, I'll show you what to do. How do you actually add that line? How do you actually use ADX and various other things, okay, on the video tutorials itself. Okay, so now we've got the blue line, and the blue line here on the 1-hour chart is indeed above level 25, quite high above, right? So that means that the downtrend is strong. Why is it a downtrend? Mainly because we have got majority of the candles under all 3 lines. 3 lines are separated, and they are sort of in an angle downwards, but not very strong. The steeper it is downwards, the more it is pointing towards the floor, and the angle is really quite steep, the stronger the downtrend is. So at this moment of time, it looks like it is picking up with the downtrend for GBP USD. So hence the reason we need to, be alert with what's going on in the news, be alert with the data releases as well, because that's the fuel. The fuel is going to come in to actually drive the GBP further down from that angle of fundamentals. Okay, so here, for example, yes, the current downtrend of GBP is indeed on the strongest side. It is actually picking up its movement to the downside. Now let's compare that to the 4-hour chart. We need at least 3 consecutive time frame to actually make that story solid and strong. Now as we zoom out and look at the 4-hour chart, we are noticing the movement to be more of a downside. You see that angle of trading, that angle of how the 3 lines are falling together with all the cursive candles are all under the 3 lines. The 3 lines are moving like a flow of river, like a river flow to the downside. They're not touching each other as well, and it shows that it is on a downtrend. Now that downtrend, is it strong? Then you use the ADX to actually answer that question. So as we look at the level 25 and then we look at the blue line again, yes, it's above and very strongly, very nicely above the 25 level on the ADX. So that basically means, yes, from the 1 hour to 4 hour, the trend is to the downside and GBP USD is picking up on the trend to the downside, right? So now the other thing as well to actually always do is to look right and to look left, right? So we begin by looking right to the prices. The current price right here is pointing at 1.1372. So you guys know now the use of psychological numbers. Now we'll just use the price 1.1371. Let's say 71 is your last 2 digit of that 4 decimal place. Now 71, as it goes above, if it does actually go above that level, then it would meet the 80 psychological level. As it goes lower and lower, if it does go lower, it will meet the 50 psychological level. So what's important for us to do now is to draw 2 lines, one above the current price at 1.1380 and the other one at 1.1350. These are 2 psychological levels. Then we will get the current price in the middle of, or encapsulated, trapped in within 2 psychological numbers. All right, so let's do that first. Now this is a really crucial step. I would actually do that with red. Okay, and that would be at 1.1380 on the upside. That's your closest psychological number at the top, right? 1380. Okay, now we've got that there. Perhaps to make the line a little thinner as well. There you go. 1380. 1380. Okay, there you go. Right, now the next line down, which is the next psychological number down, is your 1.1350. Okay, so I'll just do that. 1.1350. There we go. Right. Okay, now as we zoom, this is your 4-hour chart. Okay, you can do that in any time frame you wish. I prefer to do it in to do your analysis, especially your trend analysis or some form of technical analysis. You can actually do that on any time frame, but preferably even on high time frames. It doesn't matter, because your decision would then be based on the time frame that is best suitable for you. Okay, that does depend on your capital, your trading, your equity level, especially because the higher the level of equity, the more time frame you can actually use. I mean, the higher time frame, you can actually base your trading on higher time frames as well. All right, there you go. So now we have literally drawn 2 horizontal lines on 1.1380 and 1.1350. Now look at how beautiful that price action is. Now you can actually see that it's right on the dot. The wick is right on the dot on 1.1350, right? And then it is, you know, sort of trapped in between. So this is an indication of price being uncertain. It hasn't actually gone above 1.1380, so it's not really showing any upward movement momentum as yet. What we want is for the prices to go further down, as we can see that it's more biased to the downside, it's more bearish bias for GBP USD. So we want to look for selling opportunities, not buying opportunities. Now the reversal, of course, it's not wrong or right to actually trade reverse of the trend, like anti-trend trading, for example, and you want to trade in within the reversal, by all means you can. Just to be careful with the numbers, the psychological numbers especially. Now here we can see that the downtrend sort of extends itself until the weekly chart as well. It's very clear, you know, we have got the 3 lines and everything, and the ADX as well up to the daily chart. It's very clear, it's above the level 25. So we have got a clear and strong downtrend for GBP USD. This is how we are making sure that we understand that it is clear and smooth. It's strong and smooth downtrend. Okay, so here on the 1 hour chart, we can see that it's trapped in between the 2 numbers at this moment of time. What we want is for more bearishness with a bearish mother candle to pierce through this line and go under 1.1350. So your next entry should only be for a sell or selling the GBP USD, or a pending order in selling the GBP USD should actually be under at least 10 pips under the 1.1350. So if you wish to enter, maybe an ideal price would only be at 1.350 and under by 10 pips. So that gives you a better ideal price of a sell is at 1.1340, because 50 is your psychological number, you minus 10. When you subtract 10 pips, then you get 1.1340. With that 1.1340, that would actually then be your ideal price of selling the GBP USD. So you can put that on your pending order. Now that is your entry, right? So let me write it down right there. So 1.1340 is your entry right there. Okay, there we go. Okay, so you have got 1.1340 as your entry. Now how far more could it actually come down to? We need to look to the left for bearish candles as well, and we need to actually get that hint more on the bearish candle from the way it moves. You can always go even on a weekly chart, daily chart, monthly, it doesn't really matter. Wherever that you see it's really significant, you got a bearish candle coming through from the current price. This one here, bearish candle coming through, but not on the current price at this moment of time. So we want to look at whether or not we have had some sell-off, very big sell-off that has actually been sort of shown through some very bearish. Sometimes it could happen that you don't find it, so that would actually be a little bit more risky if we don't have a backup of previous candle movement. So as you can see here, we don't really have that going on, but one thing that is looking quite scary at the moment is the ability of GBP USD to maybe, just maybe, bounce up at this level, because it has bounced up there. We had a very big fall of price. Look at this big fall of price, right? Now this big fall of price started in 2007, right up at the peak right there. Now it has dropped to our level of price right now by 9,000 plus almost 10,000 pips since 2007, right? Now when it fallen, and at some point in 2016 it had fallen from that point, but then got reversed. Something has just stopped that fall, and that is a very significant stop for 5,000 for almost 10,000 pips down, right? So almost 10,000 pips down. Suddenly in 2016 we had something that stopped that fall. So that is a very powerful force to have actually stopped that fall and then make it reverse. So that reversal is a very significant reverse. Now that's significant reverse didn't reverse to the upside really on a large scale, only by about 2,000 plus pips, but then that fall was 10,000 plus pips. So it's a, the fall is more significant. There was all the buyers right here are not that strong buyers. If you compare it on a bigger scale, like on a on a many years, 10 over years kind of scale, then you can see that the sellers actually just predominate everything right there. But there is a limit right here. So there is a limit in this area, and in the level of 1.1350 is very, very significant. Okay, and we don't have any backup referral point to show us that there's been a fall under 1.1350, so we want to be really careful. The reason is there may be a bounce here that we don't know about, and that could actually be a trick in the market to show you that all the tools are showing you that it's a downtrend and everything else, and then you want to put in a big sell because thinking that it will sell more. But before you do that, you need to be very, very careful about what has gone on here. Okay, now as we go to lower time frame, we might get some hints right here of where the buy would actually be further up because of the buying price, or I would say the opening price of a buying candle is further up. So it does actually look like anything could happen, but most predominantly a sideways type market. A big fall is also possible, but we don't have a referral point to the left, so we have to be very, very careful with psychological numbers instead. So I think it would probably be best to not actually go into any trade for GBP USD until it goes above 1.1380 and above. Then we might have some opportunities to buy, but it would probably be zigzagging in within a sideways type movement for GBP USD, okay, or a big fall that it creates more fall as well to mirror that big fall that has actually happened in 2007 and then continuously coming downwards. But what we can actually do if we don't have a referral point as well to the left is to draw a geometric ABCD pattern. So here, this is where geometric patterns are very useful when we don't have a referral point as well. So as we drag the Fibonacci, we drag from A to B. So this is your A point potentially. It has to be, okay, let's say this level right here. This is your B level right there. But if let me just see whether or not we've got better levels. Okay, that looks like the better level right there of A. So your B would actually be here, and your C would actually hit the 61.8% level, which is a good level as well. So if I were to draw, now I'm drawing a geometric ABCD pattern to predict where D could actually fall to. So what I do is I draw A to B line. You want to make that parallel and copy paste basically. So you just click on your control button right there, and then it copies it parallel here. So then we've got a an estimated area where D would actually fall. I think I've got a message right here from N.A. William. Okay, so we've got a message here on TP and stop loss. Okay. TP and stop loss, take profit and stop loss for GBP USD, you mean? Or was it for GBP USD, right? Yes, we haven't got there yet, N.A. Williams. We have to be step by step, right? So right now we cannot have a TP or a stop loss yet because we are just predicting where it could actually fall. So now with the ABCD pattern right here, we are able to then predict a fall right to the D point here. So this could be your TP area. I'll color it in blue, okay. But entry is also important, exit is more important of course, but to get all the three entries, exits and SL would actually be the best thing to do. So we have it all complete, but going through step-by-step approach. So here, for example, I've got the blue line, and the blue line points at the D point at 1.1242. So 1.1242 could potentially be your first TP area. We can use Fibonacci as well. Now Fibonacci, we can use the retracement level of 1.1618. The reason for that is because the C point was at 61.8%. So then we pull the B to C right here. Now all these, don't worry guys, you will have everything covered in the everything covered in the video tutorials within 10 Academy as well, so you can always refer to them. So as you can see, 161.8 is right here, so you can draw a second TP level. So just giving you an indication of how far price could fall, but we have got two options. So two options of where price could fall to is, or your TPs, TP1 1.1242 or TP2 1.1204. But we need to adjust these TPs to make it a little bit safer for you using psychological numbers. We'll do that in a bit, right? So now we have got just an ABCD pattern. That ABCD pattern needs to be converted into a geometric copyrighted pattern of mine called the geometric bearish ABCD pattern. How you do that is by drawing your A point right down to your D point right there, right? Okay, there you go. So now you have got an ABCD geometric pattern because you have pulled a line, and that AD line and the BC line that have actually intersected gives you a point of entry, right? So if you draw a line right there, okay, you draw a line right there, that blue line right there, I will change it to a yellow line, a little thicker as well, to mark the centroid area. So that centroid area is your point of trigger. That means as it comes downwards, and it has already triggered, of course, here it has triggered already some time ago, and you can start selling it. Basically they're right under the line 1.1573. So 1.1573 is very close to 1580 psychological level. I tweaked that to make it a better selling price at 1.1570. So I've been selling, for example, since 1.1570, right? So 1.1570 was my selling price at the centroid area. So I'll just put it as centroid, CNTROID. Centroid is your intersection, okay, between the two lines, AD line and BC line, okay, and that is your trigger area as well. Okay, so you've got centroid. So I've been selling since then. I've triggered my my pending order, and I'm still leaving it on, and I think I'll be taking profit very soon. So here, for example, I've triggered that order right there at 1.1570 roughly, right? So that 1.157, let's see, 70 roughly, right now it's already running at 186 pips. So this is today, for example, and it triggered on the 13th of September. We are now at 16, so 3 days or so. So it's been running for 3 days already, and I've already gained 186 pips. If you are trading at 10 pips, $10 per pip, or you're trading at one lot, you're already making close to 2,000 with that trade that you've waited for 3 days. Now I'll be closing a trade, let's say, for example, very soon, because it is at that area that we have drawn the two lines at, based on psychological level as well, right? So that could be my take profit area. So now the question is whether or not we have opportunities on the sell side. That is yes, if only it goes under 1350 and then below. So if it does, then your entry price as of now would actually be 1340. So your new entry, if you are trading right now GBP USD, you can conduct a pending order at 1.1340 as your pending sell order or sell stop or anything you want. So you have got your sell entry at 1.1340. Okay, so there you go. This is your trade signal right there. So we've got sell entry at 1.1340. Where do you take profit? 1.1242 it says right here. So it's not good because we've got 1.1250 above. So 50 is your psychological level, and you need to actually take profit before it reaches 50. So before it reaches 50, 10 pips above 50 is 60. So your ideal price for take profit is 1.1260. So you've got some significant area pip right there. Let me just also 1.12, 1.12, Okay, now I'll color that purple, let's say, to indicate the trade signal. Okay, so you've got 1.1260, and I'll also mark another purple line at your entry at 1.1340 as well. Okay, then we can measure the potential pips in profit, and you would need to also have your SL based on the 1-to-1 risk reward ratio if you want to. So that means we look at the potential. How many pips potential is that? If that is 100 pips, then you want to put 100 pips up from the entry as well to your SL. Okay, so 1.1340. Okay, there you go. So 1.1340 just there. Sell entry. I will type out the exit as well. Your exit is your TP 1.1260. Okay, there you go. So you got your TP right there. Now we'll work on your SL, right? So let's look at the potential in number of pips right there. So you got your potential right there. I mean, the risk reward ratio has to mirror your own sort of things that we have talked about as well, so I can guide you on your risk appetite and everything else, and then we find a customized risk reward ratio for yourself. So this is a generic one that is actually quite workable for now as an experimentation for you guys to begin with. Is your 1-to-1 risk reward ratio. Okay, so that means the same number of pips from entry to take profit and from entry to your stop loss. So here I've measured it to be at 78 pips in terms of your entry price at 1.1340 to your 1.260. That is about 78 pips, right? So roughly. So that's your 78 pips in profit. Now you need to calculate from entry. Let's say from entry right here at 1.1340, you go up about 70 or even 80 pips, let's say, roughly. Okay, you got your 80 pips right there. So that, let's say if it is 80 pips or so, that would be at 1.1417. Okay, so 1.1417. What I would suggest is to have that at 1.1410 instead. So that would be 10 pips under the 20 psychological level, so 1.1410. So that would be slightly less than the 78 pips as well. So 1.1410. So I'll then do your SL line right there. 1.1410. There you go. Okay, so that's your risk reward ratio, almost the same but slightly lower, I think. That's 1437. That's a bit wrong. 1410. It was the wrong place that I've written it. 1.1410. There you go. Okay, so your SL, let me also type that out. $1.1410 is your stop loss or SL. There we go. Done. Now you've got the three elements of your trades all completed. So this is for GBP USD trade signal, trade idea, selling at 1.1340, stop loss at 1.1410, take profit at 1.1260. That's about 70 plus pips in profit and also in loss potential. So it could go either way, right? So you will have that basically set up as a pending order if you wish. That would actually take the stress off you of monitoring the market all the time. So you can actually go onto your pending order, go onto your new order, and make sure you are choosing your intermediate cancel, your pending order right there in the type as pending order. So when you click on pending order, then you know that you can set up all the prices that we have told you here in your trade, so you don't need to bother about it, and just basically have that accepted as your risk of 70 plus pips, a profit potential of 70 plus pips as well, with the ideal entry at 1.1260 for GBP USD. Okay, hope that's been clear. You guys okay so far on GBP USD? I think what we need to do right now is to go on to some previous trades, just to give you an idea of how gold has actually performed, what are the levels that you would need to look at. Also, I'll go on to Euro JPY as well, because we've got some running trades on it, have given some trade ideas. A lot of traders were on it as well, and is it time to exit? Is it time for us to actually continue the trend, leave it, and a lot of other things that we can actually answer. So let's get to gold first. Okay, now gold is trading at the moment at 1663. 1663, 1664 area. Okay, so 1663, yes, correct, I got the price right. Now it's got a little bit of room to go downwards, but it's got a level of support that you need to look at and exit before 1645. So anywhere between 1645 and 1650, it would probably be good for you to exit there, right? Mainly because of that bullishness right here. It has actually gone up and then reversed exactly at 1735.11 that we pre-drawn that line some time ago, and it has actually hit there and then came down and broken out of that bearish zone as well, that bearish red color zone. So that shaded red color zone was a bearish zone, and we have mentioned about it as well, that if it does actually break out from it, then it's got more potential for it to go down, especially if it has actually gone down and under the D point at 1684 of a previous bearish geometric pattern that we have drawn. It has actually gone past this lowest area, the D point area as well of the geometric pattern. So that gave us a lot of indication right now that it has more room to the downside. So it's got a little bit more room potentially, but there is a 1645 area or 1646 area as a very strong support. So do exit before it goes there. So your take profit should actually not be under 1645 and under, should actually be 1646 and above. So 1647, 1648, entirely up to yourself, wherever you want to have your TP. So as long as it is above is above 1646, okay, 1647 or 1648 as I've mentioned. So that is a better way to actually govern your risk and also uncertainty of how far more could it actually go. So that is an area of support that is very, very significant for gold. Okay, so there you go, guys. That is the best that I can tell you on what to actually do on gold for this moment of time, mainly because it's a Friday and it's probably not a good idea for us to set newer trades and look at how we can set up trades and leave it open for Monday. It's very risky to do that. So I would prefer on Monday's session, on the Monday's market preview or week ahead webinar, to then look at where we stand with gold and then plan again, right? So it will probably be best at an intraday type trade, and then you close all your trades, for example, just so that you are aware, and also have your TP area or your stop loss area as well, especially for gold, you know. Okay, there you go, guys. That is for gold at this moment of time. Now I am excited to also show you Euro USD, and then we go on to Euro JPY, mainly because of all these plans that we have set up right here. Now we have, if you guys have joined me on Monday and Wednesday, we have already plotted this before the market moved, right? And we can see that how all these price movement right here, this is on a 4-hour chart for Euro USD, have respected that green zone as a neutral zone and went sideways, as we have mentioned, right? So we have mentioned at that time we were not sure whether it would go straight down or bounce up straight away, go up, but then from a lot of hints in the market, from candlesticks movement, psychological numbers, and the way the opening price and closing price of major mother candles have actually given me the hint that it is most likely to go sideways, and it actually did, went sideways there and in within the green zone as well, but it went downwards a little bit and broken out of that green zone, that neutral zone, and went and touched and entered a little bit of the red zone. But then it stopped there, mainly because of various support. If you look left a little bit, you can see we've got very strong support on the left as well. And here you've got your support, here you've got the support, and now it is reversing again to the upside at that same similar level. Okay, so again I would see it as more sideways type movement in between the blue and the green zone. So it has already sort of put its foot down onto that level right here, this level right here. So it has more bouncing up movement to the upside for Euro USD. So we don't know that yet until it goes and enter the 0.1000 area. That is your bullish area, and only then we can actually plan ahead and trade to the upside systematically. At this moment of time, it's just going to be more on a neutral sideways type movement like this. So you would have like waves, like this, like camel humps to go sideways. There you go. That's for Euro USD. Now, for Euro JPY, there was a signal there. I've given, I think, on Wednesday on selling at 144.90, and then you take profit at 144.10. So that was an 80 pip potential for the sell. Before that was a potential for the buy, right? Another 80 pips up. Roughly, and then 80 pips down as well. So we are trading in the Black Sea area, or the black zone right here. And so it was an up 80 and a down 80, so 160 pips right there, which was really, really beautiful. And then now it has actually gone. I'm not sure where prices are at the moment. Let's just see. Prices are hiding between, I think it's just at the 142.90 area. So here we could see that it could potentially bounce upwards, but the upward type bounce, or as a correction, would only be limited at 143.70 area. So I would think that from there itself I would want to reverse. So we've got very limited upward, very small upward type movement just as a test for Euro JPY, but I think the bias is going to try to actually fall further. But in saying that, it is also quite significant in terms of its movement to the upside, following some areas, some zones, especially on a 4-hour chart. On the daily chart, it's very biased to the downside, but on the 4-hour chart, we do have probably a little bit of reversal movements, but that could possibly be reversal to the downside. But then if it goes above the 142.90, or better still 143 psychological level, 143.00 area, then we could see it moving upwards a lot more, and then touching the 143.70, and you should exit at 143.70. More buying opportunity would actually be at more solid buying opportunities for the Euro JPY would be above 144.00 psychological level. So your entry should be 144.10 and above, but that's far back, far ahead at the moment. So we are just looking at this area right here, but it has to go to 143.00 would be a better place for us to look at buying at 144.10. Okay, all right, there you go, guys. So we've touched on that, Euro JPY, gold as well, and that's basically it. Okay, guys, any questions at all? Any questions before we end the session for today? Any questions? No? All right. No questions. Okay, for those of you who are going to be meeting me in Nigeria, I'll be arriving on the 18th. On the 19th, I'll be departing this Sunday on the 18th. So we'll be happy to meet you guys in Nigeria if you want to meet up. And for the sessions, I will be doing pre-recorded sessions since I'll be moving about and having my workshops in Nigeria, in a.k.a. So do text me onto the groups, and we can communicate from there. With that, I would like to end the session for today, and thank you very much for all who have attended my webinar for today, and we'll see you on our pre-recorded sessions, as well as our Wednesday session will go on as normal. So take care, everyone, and we will be seeing you next from Nigeria live, and we'll Take care. Have a great weekend. Bye bye for now.